So I ran replays last night on how does that actually work. All right, so we're gonna trail to the zigzag now instead of just a 20 tick trail. So I've made the trail a lot bigger, just to review it again. The target's the same. The target's 80 ticks. The stop will move at plus 10. It'll go to minus 5, and then at plus 20, it'll move to entry plus 1. Okay. Then it just starts trailing by 40 ticks at 40 ticks. So that's really a big trail. All right. We want to give it enough room to make that pullback. The 20 tick trail is just not enough. We keep getting tagged just as the market's finishing its pullback. All right. But then there's a separate mechanism now that will exit at the zigzag here. So these blue and pink lines that you see are the lines. So once we get into a trade, you won't see it trailing beyond just entry plus 1, and then it's just going to sit there until the market gets really far away, 40 ticks away. I'm trying to give it enough room to do that pullback. The tests I ran last night were no trail at all and no target at all. Just let it go completely. All right. And so what that shows is it's not as profitable as just exiting at 80 ticks with a 20 tick trail. So we'll review that on Saturday. All right. The next sequence would be to change those parameters a little bit, because what we want to do is find the balance between no trail at all and too tight, right? So right now 20 ticks is too tight. No trail at all doesn't do that well either. All right, with no target. So the next thing to do is try no trail at all with the normal target, and then something like what I'm doing right now, which is the normal target with a bigger trail. All right, and so we'll zero in on what the best balance is, assuming there is one, and then from that make a decision on if this is a tool that we want to use. The next step beyond that is to use this method and then add on that first pullback, at least the first pullback. All right, so anyway, so for today, a big overnight range, so I'm not starting till 7:05, and the market looks a little scary to me. It looks a little volatile, so I don't like that gap right there. This is wrong too. So the market's really jumpy. This is wrong. The way the market's moving, this is wrong. All of this looks pretty scary, actually. All right, so let the market settle down before we trade. And this is not just subjective. The data very clearly shows that in the volatile periods, it's much safer to start at 7:05. The difference is pretty dramatic. It's on the order of 30% more profitability. All right, so filled short here on a failed pullback, but definitely a case where the entry method is helpful, because the normal entry method is you're going to get stopped out on just as it turns over. All right, so now we hit 20, so now we're at entry plus 1. It's at scratch, but now we're not going to trail anymore until it's just gonna it'll exit at the zigzag. Actually, that's not completely correct. What we did here for today is we have it set for a 40 tick trail. So if it falls 40 ticks, it'll start trailing by 40. And we're looking for that kind of sweet spot between giving it enough room for a pullback to occur but not take us out of the move, and not just giving everything back if it just completely turns around on us. So the replay results last night using no target and no trail were not as profitable as using an 80 tick target with a 20 tick trail. So now we'll continue to do those tests to find that sweet spot wherever it happens to be. But for today, I'm using an 80 tick target with a 40 tick trail at 40 ticks, and then an exit to the zigzag. All right, here we are at the end of the day. Actually, my result for the day is minus 115. Actually had a mistake here in my trail to zigzag method. So I think we saw this live here. We got short here, and then we get stopped, for at break even, right? One tick gain. We would have made a couple of ticks if we'd been trailing by 20 there, not much. This is the kind of painful one. We get long here and advance, but you can see in this particular case, this pullback is even so deep that it's taking me out at my entry. So once I get 20, I go entry plus 1, and now I'm going to trail to the zigzag. And unfortunately, it pulls back too deep and gets me there. I'm not willing to get up this much and then take a loss. In this particular case, I would have been okay, but just barely. The assumption is that if you can't stay above that entry, then the market's turning on you. The problem was here. So right there, we get short. And the normal stop there is like right here. But you can see I actually exited way up here. A normal loss should be on the order of 2.5 points, maybe plus maybe some slippage. This is 2.5 times that. And what happened here is the system that's looking to trail to the zigzag is incomplete in that it sees this previous swing high and goes, oh, I'm above the swing high, and tries to flatten. But of course, that's not what it should be doing, and so other things are happening that conflict with it, and I ended up with in the market with no stop, and then other things happen accidentally that take me out. So I've been working the last couple hours here to fix that problem. Because what we want here is we want to get short here, but we only want to trail to the zigzag that is below us, not above us, right? So if the market falls here, this is the zigzag we want to trail to. So it needs to be a lower high than the previous zigzag, the previous swing. So I'm going to test that here in just a minute to see if I've got that working. Let's see what would have happened had I just taken my loss here. I would have been down 8 ticks at that point. Let's see, you take a loss here, because a 5-tick loss here. You're going to get long there. You're going to get plus 10, so you're going to move to minus 5. Going to stay out of that chop, which is unfortunate. Look at the codes there. 251, 223, 251, 251. The market's clearly saying there's 3 251s there. 251 means there's a break of the level and the prediction is failure. So the market is, the machine learning system is predicting that this long break will fail there and there and there. All these places off of this break level. All 3 of those bars are closing above it, and the system says, nah. And very nice little drop there. Unfortunately, the way that we're set up here is that's going sideways now. So the machine doesn't do anything. We don't take a trade there. Yeah, that's right. More sideways action here, no codes. Okay, so then we get the opposite. Right, this is a break short where the prediction is long, and that's what. So the arrow's showing you, hey, we need to see that bar because the way we're doing their entry now, and there is no fill here. So we would place the order right there, and then when that bar closes, we would cancel the order automatically. So we give it 2 bars. If we don't get filled in 2 bars, then we're done. The normal entry would enter there if you got filled, and then you would scratch. So the normal entry would be, right there. All right, let's see what else here. Sideways, more sideways, and then there's a long there. Let's see. I'm having trouble seeing. Am I going to get filled there? It's going to place the order right there. And you should not get filled, and it should cancel because we placed the order bar 1, bar 2, and then you're done. Kind of a blah day here, even though there was a lot of movement. The market was really jumpy, so you see it repeatedly here. And actually, as the market opened, we were talking about this is going to be a dangerous day because it was a very sudden drop after the news at 5:30. All right, minor interruption there. So the market had fallen hard here off this news, and the overnight range was more than 70 points. So I started at 705 because of that, per the rules. But we were looking at these gaps in the data. There's a bunch of cases where the market's just whipping around so quickly that the chart's not even drawing correctly. And so we see it actually later here as well. And then all throughout here, actually. And then right towards the end there, I want to bring this up because I had a conversation with a member who somewhere in here you can see these bars are just not right. This is a range bar. The next, and that's an up bar, right? So the next tick should be up there. Instead, it's way down here. So it's dropping dramatically. And I had a member who had a problem where the order gets placed and then filled. When it gets filled, the bracket orders get sent. But before the bracket order gets filled, the market has fallen through what would be the stop, and so the order gets rejected. And now you're in the market with no stop. And so that's clearly something that we have to deal with. So I was actually working on that as well, making some changes to the spreadsheet here, adding in a max trade loss. So the spreadsheet is now also looking to see if the trade that you're in is, should have been stopped out and wasn't. And then I have the fix here for the zigzag trail that caused me some trouble. So I'm going to actually test that right now and see if that works like it should. All right, so I just ran a replay with the fix, and we see that it correctly exits here instead of completely messing up. That's going to have to be tested live though, just to make sure, because there's the part of the problem is a funny interaction between the system that's trailing to the zigzag as well as the system that is canceling working orders when you place an order, and then you have to decide when to cancel it if you're not filled. So those two systems are working together, and they're the ones that were interacting in a way that caused that problem for me today. I believe that's fixed, but let's trade that live and then make sure that's the case. Basically, the test is we need to get short above the previous swing high or get long below the previous swing low. So the key here is that we don't want to trail. If I'm short from here, I don't want to trail to this swing high. I need a new swing high. All right. So we will test that. And then the other thing that I put in was this max trade loss. So let's test that real quick. All right, so what I've done here is I've told the system to use a really big stop, 40 ticks. All right, because I want it to miss it. All right, and then in the spreadsheet I've told it, look, if you lose more than $60, then you should be flattening. Okay, so $50 is the normal amount, 10 ticks. All right, so what we should see happen is, if it's successful, we should see this order get placed here, and then the market move through $60, which is into this bar right here, the 733 bar, and then we should see the stop will be way up here. Well, we should see it go ahead and cancel because it's exceeded this amount that we're putting right here. So the normal stop is $50. So we're saying, okay, if you hit $60 and something's wrong, go ahead and flatten everything. All right, and this would be almost like a second stop for your trade. All right, so let's test this now. All right, so we're in the middle of the replay here. We've got the order placed now. The stop should be way up there, yeah. And so what should happen, or rather what we want to happen, is that when the market moves, up through like 98-ish, yeah, when it hits 98 or more, we should see it flatten. So let's run this and see if that works as expected or not. Let's not go too fast so we can see it happen. 5x speed now. Right there. So you see 3 points, exactly what we expect, and everything else canceled. The stop that was way up there canceled. So what we're doing here is, that might confuse it that there was a stop there, but we're simulating the fact that the stop did not get hit like it was supposed to because it wasn't placed for some reason. All right, and so instead, a different system is looking, and when it sees that the trade is underwater more than it should be, it flattens it. So this is an extra set of protection. And in fact, we can keep going here and look at the next trade. I think the next trade was a loss also. Let's speed this up till we get there. All right, so here we are with the order placed long on this next order. You can see the stop's way down here. The stop just moved. Let me get out of there. So actually, can I cancel that? Yeah, so the stop canceled. I canceled it. There is no stop in the market, and yet the system still comes in and stops it, though that number doesn't quite look right. Let's check the log here and see that that was a cancel and not some issue with the stop. Let me see here. All right, so it looks like on that second trade, I didn't move the stop quick enough, given the way that, because it's moving at like 10x speed. Here's the log entry for the first one that we saw, where it shows that the source was the flatten and cancel cell. That's this cell here. It says, hey, if this is where the logic is, it's referencing that number here. So, whoops, where did my log go? This is saying I flatten the order as opposed to a normal, I hit the stop is what it would normally say here. Okay, so that appears to be working well. Same thing though. Let's test that live and see, make sure that works correctly. I can do that by tomorrow in the trading room. What I'll do is I'll set my stop bigger than I would normally, just like you saw me do here, and then set this to the normal amount, which would be like 50, and then we can test that live to make sure that works under live conditions. All right, that looks good. And then we'll see what tomorrow brings. Today, what I've been saying in the room recently is that when I look at the daily charter, I'm very suspicious of this move here. We've been talking about, look, the range is coming down, and if it keeps coming down, we'll start building models for normal market conditions. But I'm careful because this move up here, I'm really suspicious because it's on declining volume. So I'm kind of waiting for the market to just fall apart here. This smells to me like the bigger funds are liquidating. That's the signature of the big guys taking advantage of the little guys, suckering them in on as the market advances on declining volume. So today we got some news at 5:30, whatever it was, freaked out the market. We'll see if that's just a one-time thing, or if we're now we're gonna revisit these crazy volatile times as the market falls again. All right. In either case, we are prepared. We know what to do, and